Moon gang. Hello, folks. I was just checking out some crypto stuff right here. We do have some important things to go over about just kind of the large market. Of course, we're going to be hopping into that breakdown of AMC, GME, SPRT, ATER. We do have a lot to go over, but some things that just came out this morning that I want everyone to know about of what's happening today. 5 things to know before the stock market opens on Tuesday, September 14th. I just want to kind of quickly share all of this with you to see what's going on. Wall Street looking steady ahead of key inflation data. Actually, I want to dive a bit more into that. Apple to hold launch event, release iOS security patch. So with the launch event, we definitely might want to be tracking Apple today. This is more anecdotal, but usually with these launch events, the stock does react in a pretty positive manner. Cathie Wood foresees big gains for Tesla and crypto. In fact, I was just seeing some things with Benzinga that she was actually reiterating her like $500,000 target for Bitcoin specifically. Also pretty bullish on Ethereum. She runs ARK Invest. That's where you might know her name. SEC chairman to face questions about crypto regulations. We'll be looking into that. And also House Democrats propose tax hikes to pay for $3.5 trillion bill. So that's your quick rundown of like the 5 major things to pay attention to for the day. But like I said, number 1, the key inflation data, that information is actually already out. Stock futures jump after CPI inflation report comes in less than expected. So that's actually pretty good for the market. And as we're about to see in the S&P 500 and on the Russell 2000, that inflation I never bought it, and it still blows my mind a little bit. I don't think that this inflation situation is transitory, but that's what the Fed's been saying this entire time. And right here, U.S. futures jumped Tuesday after key inflation reading showed a consumer price rising less than expected. So maybe. I don't know. I don't buy it, but I'm hoping inflation isn't as bad as it really looks. But right now, that's why some of the major indices are up, just so everyone knows. Goldman names Dennis Coleman as new CFO starting next year for retiring Steven. Don't know what that's all about. But anyway, let's take a look at the overall market. It can probably actually be centered right here. So we're seeing a nice pop on the recent news for the S&P 500 about this inflation coming in not as hot as expected. We saw a pretty nice pop there, and I'm looking to see if there's going to be a continuation above 449. I do like the S&P 500 above 447, but if this thing can clear 449, where we've seen some support, we've seen some resistance, I think there's a good shot of it returning back up into this kind of zone of supply that we've previously been seeing, paying attention to, watching, whatever you want to call it. But let's watch 449. That means it has about $1 to go. In terms of the Russell 2000, tracking the small cap sector, same thing. Nice pop because of the inflation being not as hot as a lot of people were expecting. I want to see this clear 224.50, maybe 225. Oh, I'm sorry. I don't know why my camera's hopping like that. All right, looks like it fixed itself. Anyway, we're looking above 224.50. That is resistance, but 225, I care about the Russell 2000. Specific to the Russell 2000, the reason that we're talking about it is just because AMC is the biggest stock within this particular index. So worthwhile to pay attention to. But both of these indices that we watch are looking strong because of this inflation thing going on. And just because I did talk about Apple, let's just pull up the Apple chart just for anyone paying attention to that. Apple also currently sitting at a key level, 150 key psychological level. And honestly, resistance, support, not that far away. I would love to see Apple pretty bullish if it can get above 151. I think there's a good shot of it coming up to 154 then. Or on the flip side, look for the breakdown of 149. I do favor the bulls in this scenario just because anecdotally, it seems like market participants do react well to Apple's launch events, and also just in terms of the technicals, it's not that recently it was pretty oversold, so I would be looking for a bounce back in Apple. And just because people seem to be asking about it more, Tesla right now looks strong. I'm looking for Yesterday was a weird day. It sold off but bounced back. It looks like it wants to push 750 today. After that, I would look for the break of 760. From there, I would watch 780. But it seems like in terms of these bigger companies, like these large cap stocks, It seems like there's reason because of the S&P 500 and what we're seeing there kind of having a little bit of a bullish bias for the day, but who knows, that could change at open. But for right now, before market opens, it looks like people are kind of pivoting back to being risk on because of what we're seeing, more so related to all that good inflation jazz. And really, this is the one that's confusing me a little bit. It really is. Not expecting crypto to react positively to that news. In fact, I wasn't expecting crypto to react positively. Generally, they're going to move a little bit inversely as people view crypto really as a store of value, but actually the opposite. Bitcoin right here on that news doing better. So interesting to note, but right now crypto on a shorter time frame actually taking that inflation news pretty well, opposite the direction that I would have expected it. But it looks like Bitcoin's heading back up to 47,000. From there, I'd watch 48 and a half. Ethereum at 3.3. Cardano right here, $2.40-ish cents. Looking for it to make a base and start to swing back around. And then Hex is still doing its own thing at 40 cents. Let's talk about the stars of the show. Let's kick this one off with AMC. So AMC today, they've actually already borrowed $250,000 against it. Short interest 19.95%. The shares on loan, with this taken into account, 112 million. Utilization 90.47. And just for anyone who's curious, the average age of these shares on loan is now officially over 60 days. We were actually at 64 days. That's the highest we have seen it in quite a while. In terms of GameStop, they've already borrowed 46,000 against it. Short interest 13.81%. Shares on loan 7.5 million and a utilization of 36%. In terms of the average age of these shares on loan for GME, it is almost 34 days, just so everyone knows. Oh, talking about data, the whole GME float of 250 million. I've sent out two different emails to, like, one to that Yahoo one and one to another contact. And thus far, I've not gotten a response, but just like I know there was some discussion and concern about the Yahoo Finance talking about the float and some other data providers. The reason multiple people are reporting that number is because they're all using the exact same one tainted source, just so everyone knows there. It's not like they came to that number independently. They're all sourcing that data, and that's why we're seeing some places use that data. But overall, remember, you get what you pay for. Free data from Yahoo Finance is going to be free data from Yahoo Finance. If there's any sort of paid service such as Ortex or Bloomberg, I would trust them exponentially more than I would trust the free source such as Yahoo or any of these other ones where people are just like clicking and seeing it. Usually it's delayed. There's a better chance of it being referred to as like dirty data or something like that. But that, to really sum it up, it is wrong. GameStop, GME does not have a float of 250 million shares. That is incorrect data. And the reason why it's being reported, that's what I'm trying to get to the bottom of for everyone. I'm sure there's some weird bogus explanation, but just so everyone knows, GME does not have a float of 250 million. In terms of the technicals, let's start off with GME because I was just talking about it. So previously, because of the earnings, it got knocked out of this kind of trend, this region of supply that we've been paying attention to. But I love that it got back into it on a series of higher lows. Love that it's battling it out in here. Holding above 200 is very good for GME. It is very good for GME. I want to see it overtake 205. From there, we have to watch 208 and a little bit of change, and then 212 to 215. Above 215, I'd feel pretty good about it battling it out at the top of this range of 225. But I mean, firm handshakes, as Dr. Disrespect would say, to the GME crowd, getting this right back up to where it's more recently, that's its like normal, quote unquote, normal area. So seeing some strength there, and I just want to see some follow through. But in terms of pre-market, hey, I'm liking it. We're at 203. Anything above 200, I do like GME. AMC still hanging out above its own range 2 days in a row. The volume is a little lighter than I want it to be. AMC's coming in at a volume of 75 million shares. I want to see it one of these days, while it's a trading above 50, I want it to be 115, 125 million. The volume has been light on AMC. I want more general market participants to be accepting of the new price. And one of the signs of that is going to be a lot of volume traded at these levels. So once again, AMC, we know 52 is kind of an important breakout. 53 is also a pretty notable one. We're currently dancing around at 51.64, which is essentially where we closed yesterday. So not really gap up, not really gap down. Interesting to see what the open is, but like I said, the volume has been going down, down, down. So I'm looking for kind of almost a momentum shift in the volume to start going back up. And I want to see these days where we get back above 100 million in volume to really confirm the new price levels that we're currently seeing. Here, let me do that's. So right now, AMC, GME looking good. Yesterday, and I talked about this in my update video. Yesterday, I think because of the gap up and then them essentially closing flat based on that gap up, even though both AMC and GME were in the green, I think people had a bit of a weird emotional response as if like the expectation was a lot more. And of course, every day we want it to go higher than whatever the value is. And that's fair. But remember, I mean, any green day, yesterday AMC gained 3%, GME gained 6.82%. A green day is a good day. I think we need to be a bit more appreciative of days like that. We can't, I sense like the mood was a bit like neutral, as if, oh, like we expect this. Don't have any expectations. Every single day is in a battle, and we battle for every single cent that AMC and GME go up. So please remember that. And I mean, hey, if we just get these back to back to back, always just like these small percentage gains day over day over day, I'll be super happy. I love it. Either way, green is good. And I think just because a lot of people are going to be interested, let's quickly do a run through of some of these other popular ones that people are curious about. SPRT. SPRT has a short interest of 97.35%, shares on loan of 7.13 million, and a utilization of 97%. So SPRT, I do think is an interesting one. All the numbers are there. I just want to see a bit more strength in it. I actually don't even need this block anymore. Let me save that. There is a gap fill region up to the 30s, the low 30s, like between 30 and 30.50. I just want to see a little bit of a trend, a little bit of strength for me to get back into SPRT. As soon as I see it bending back around, or in the scenario that it's severely oversold at support, I could see myself then getting back into SPRT. But in terms of the metrics, very strong, very strong on SPRT. The short interest, the shares on loan, and the utilization. The other one I see a lot is BBIG. BBIG. Why is my camera popping out? I don't get why it does that. The short interest is 26.91%, the shares on loan 26.31 million, and the utilization 99%. So right there, it has the same numbers. BBIG is a bigger float company relative to SPRT. SPR is by definition a low float stock. So I like that. BBIG, I would like it just to kind of recapture 10 and get out of this momentary downtrend that we're seeing right here. I would actually really appreciate that. So we have this momentary downtrend. I want to see a reversion pretty much on that. So I'd watch the 10 mark and then 11, and above 11, this thing could have quite a bit of strength. Let me think of the other ones that are commonly asked about. BBIG, I think, ATER is one that people have been asking about lately. ATER, what is this camera doing? I have like not switched any settings on this camera. I don't know if it's like a lighting thing and it's not picking up my face, or do I need to switch it myself right there? Does that work? This is crazy though. Sorry about that. Okay, anyway, ATER, short interest of 53.7%, shares on loan 13.6 million, and utilization 99%. So this one is kind of in between the previous two. It's a bigger float than SPRT, but a smaller float than BBIG. Still has a higher short interest, but relative to those other two, actually, it's less than SPRT for sure. This one is interesting, really, because it has been picking up like the excitement in the stock. And when I refer to the excitement, I'm just kind of pointing this out. The only thing is, when it runs so much, and I'm not gonna like ever switch my rhetoric on this. Like, what's the chase here, folks? Like, I mean, it gets very dangerous when you're in this. I mean, it was overbought for 4 days straight, and that it could keep going. But every day it does another day, that actually means it's a little bit closer to like it running out of steam and people running out of buying pressure on this. So I do have a bit of concerns. I mean, with it, obviously it could squeeze it. All of these, everything I've talked about today, really, and we've seen the metrics on Ortex, all have the capability of doing something insane. It's just really, what's the question? That's the question. It's like, well, how insane is insane? Like, what kind of percentage gains, what kind of movement are we actually truly talking about here? So ATER, I'm still liking it. I think it's pretty interesting where it's at and what it can and can't do. I don't know. What I would like to see is, I just don't want to see any bearish divergence in the chart. So what that means today is, on a move upward, a spike upward, I do want to see, I guess, well, man, that is high. That is very, very high. We need to almost exceed an RSI of 90, which is like the max value is 100. So, and that's possible. If this thing gets moving, it's going to have an RSI above it. I just don't want to see any bearish divergence, but maybe the people paying attention to this are not, maybe they don't care about these technicals, this RSI at all. That's also a possibility. But ATR, all of these, ATER, BBIG, SPRT, all worth a watch just to see what's going on. But people are also asking about any. Any was looking pretty weak recently, wasn't it? Any Sphere 3D. Sphere 3D. Whoa. Wait, any has like no short interest. The short interest on any. Oh, wait. This was a miscalculation, I think. I remember something was weird about the any data set of like their estimation was off by quite a bit. I need to think about any, but I remember the it's the PlayStation remote orb, I think. Oh, that orb, that's like, is that the lighting that's like messing it up back here? Let me try that for a second, because this is getting annoying. I feel like that shouldn't be the lighting that's causing the readjustment. But anyway, with any, I think, because remember, this is estimated. I think they were severely underestimating how much was actually going to go short against it. So any, a little bit of a weird story, but you have to dive a bit more into the data on that one. I would say out of all of these right now, the ones that catch my eye are currently, and for this type of play, and once again, never ever saying that these are even in the same league or even really the same style of play as AMC or GME, but SPRT and ATER are both kind of, I guess, catching my attention of the levels they're at and the numbers that I'm seeing in the what's being reported by Ortex. S&P 500 still trying to hold up here on top of that inflation news. We have AMC trading at 51.37, GME trading at 203. So really not much of a move for either of these in the post or pre-market sessions. So we're just waiting for that bell to go ding, 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 ding at 9:30. Camera had too much coffee this morning. I didn't switch anything on it. I just turned it on. So it must be something with the lighting, or maybe it looks at me and it thinks I'm ugly. A lot of people asking about SDC, Smile Direct Club. SDC is up 5%. It's a good looking chart. It looks like it almost might have a gap fill though. Yeah, Smile Direct Club. I just think it goes to 660. I mean, to me, this is a somewhat easy of a gap fill play. And I don't know if I would try to make it anything more than that. But looks like they have this gap fill up to 663. So if you're not already in it, the reward isn't there much more. We were talking about this yesterday. I could see if it's being shorted in any manner. I don't know if it is. Oh, it is. Interesting. Short interest of 38.67%, shares on loan 36 million, and utilization of 88. Not the best one we're seeing, just because it's more of a mid-tier float relative to the other ones that we've been running through, and I could just tell that from the amount of shares on loan. Remember, the lower the float, the easier it is for a stock to move. Think of it as less baggage. The less baggage you have, the less shares you have to carry with you, the easier it will move. So compared to something like whatever, SPRT or ATER, this is a higher float stock. So for this entire concept of FTD, quick swing short plays, this one has potential, but in terms of technicals, I guess it would have to get above 730, but we talked about this yesterday just in terms of a very quick gap fill play, and I still think it's going to do that gap fill play, but I don't know if it has enough like juice or enthusiasm behind it to push higher. It definitely might, so we could watch it throughout the day, but to me, this was a quick, just technical play. All right, I'm way behind, so let me answer some of the questions. Everyone, let's hit the like button before Matt shows up. I appreciate that. Hey, Matt, is Root being shorted? I believe so, but the numbers aren't as high, I don't think, as any of the ones that we've already checked today. Yeah, 25.67% shares on loan, 20 million, and utilization 92. So in terms of FTD squeeze, I don't even know if Root's on the FTD list, and even if it were, this one has probably, relative to SPRT, ATER, even BBIG, probably has the least impressive numbers. Can you please check out MVEB as well? Yeah, no, this one is not a play I'd be paying attention to. The numbers just aren't strong enough for this like FTD short squeeze thing. It is the lower float, but I mean, this one has 19%, and that's very, very high for like a normal stock. But like if there's better opportunity, I would go with the ones that are better opportunity. So I just think there's a better edge in these other ones that we've gone through compared to NVEB and Root. Like I think these are two of the weaker ones that we're seeing right now, relative to the other ones that we ran through earlier today. Do shorts need to cover before merger? Can shorts get away with not covering and wait for ticker to change degree? Does carry? Yes. They don't have to cover. They would just have a proportionate short position on GREE. Can you check out KPLT? I mean, KPLT, my I guess discussion on it has not changed. I'm just looking for the gap fill up to 930. To me, KPLT is like not a short squeeze play. It's more of a technical play. Your risk is getting a bit far away. I still think you have to risk like $6. So now you're risking $1.20 to make, what's this? I guess $2.20, which it's okay, but I still think KPLT is a gap fill play up to 930. Need to adjust the f-stop if you're using a DSLR. I'm using the Sony A7. I don't know if that's technically DSLR. I think it is. Yeah, but it's something with the focusing. Something with the focusing. Coffee had too much. Camera had too much coffee. Shout out Wall Street Viking. Hurry up, 9:30. Apes are ready to play. Good morning, you beautiful apes. Hope everyone has a great day. Shout out Big Shop. Matt's camera is in doubt and must zoom out. When you check tech on the chart for MNMD, please. I have 100 at 283 and just curious about your opinion on the chart. MNMD. Not looking the best. It looks like it's gap filling down to 222. Gap fill down to here is what I'd be looking for on that. Clubfoot Billy, thanks for bringing me on the Twitch team. Much love as always. Yeah, Clubfoot Billy. I noticed that you're in there quite a bit, and just with like, I guess the more people participating in watching on Twitch, I figured it was logical for me to get a couple more mods over there. So I hope you don't mind. Matt, SPRT is merging end of day with Greenidge, so SPRT will no more tomorrow. SPRT will only take up 8% of the new ticker GRE, so short interest play is gone. Yeah, with it, actually, so I don't have an SPRT position. Actually, just so everyone knows, in my public portfolio that I talk about with you guys, I'm in exclusively AMC and GME right now. I have no BBIG, SPRT, ANY, ATER, any of those. I do not have any of them. All those comments were hopefully just unbiased. I do not have skin in the fight for either of those stocks. Actually, let me just double check. Didn't I make a small position on something yesterday? I don't want to speak incorrectly. Let me just double check. Okay, I did pick up a small ATER, and that was the one that was not even, I don't even know if it was 1% of my portfolio. So I have a baby ATER position. I actually forgot about it. But with SPRT, the merger and all that information and the proportionate rate, that play might be a done play now, because like Adam just brought up, it becomes a very, very small part of GREE. So that does complicate the situation. And with SPRT, it becomes more risky today, with today being the final day before the merger goes through. So everyone needs to know that if you're in SPRT. With it, you might have to wait till some of the dust settles with GREE. And what I'm talking about is to me, it's somewhat of a similar situation of when MMAT absorbed TRCH. So a lot of people like TRCH for the potential of a squeeze, but then when MMA absorbed it, then that absorbed all the shorts and the short interest. And the next day, the way TRCH was moving originally, you didn't see that follow through, because it was almost diluted. It became a small portion of the overall stock, the new stock. And that might be a similar situation with SPRT when it goes into GREE. So with that, don't think that you're going to see the exact same numbers and behavior when it's absorbed by the new stock, because now it's technically it's part of a whole new company. So please, with that one, be careful. Tomorrow, SPRT is GREE. Cause the people ask for your opinion. Do they ask cover shorts? No. So to my understanding, the research that I was doing last night, the way if you're long on SPRT, you're going to get a proportionate amount. With GRE, especially if the borrows are there, it gets a little bit more complicated, because when you're long, but shorts, it's a little bit more complicated. But everything I was reading last night was indicative of the fact that the shorts would be a similar proportionate thing, except instead of betting against SPRT, you're betting against GREE. But don't forget about, in a sense, the short interest percentage would almost be diluted. You're going to see a drop in it. It's not like GREE is going to have that same 90% short interest. So the play does change. GME forward price earnings. I mean, when you're looking at PDE, that's a very fundamental breakdown. And I don't think GME is a fundamental play. I don't think AMC is a fundamental play. Curious what happens to option contracts on the SPRT merger 2010-15. So Eric, that's actually really one of the things I was looking into majorly last night about what this merger is. And I wanted to find, proof exactly of what's going to go on with options. That's really what I was looking into, not necessarily the stock. The stock's a little bit easier to track what's going to go on with. But in terms of this, most of the rhetoric I saw with the SPRT is same thing, that it would be changed proportionately. But I actually did see a couple of threads that disagreed with it. And so with that, midday today, when I take my midday break, today, just so everyone knows, I am planning on streaming to 11, and then I'll be hanging out with the Discord for a bit, and then I'll start restreaming at 2. So I'll do 2 different sessions today, just so everyone knows. But maybe that's another one, so that I'm looking for a specific response on. But even with it, not even really to options, using the MMAT, pattern and blueprint when they absorb TRCH and this GRE and SPRT thing, I don't know. In this scenario, if I was up quite a bit, because we've been talking about SPRT since the $8-9 range, I mean, I don't see there being harm in locking in what your gains are, waiting for this merger, the dust to settle. And if you still like to play, going back in. It's so much better to lock in some capital than to risk your gains going to zero. It's all about capital preservation. Ding, ding, ding. Dingity, ding, ding, ding.
Oh, brother, the market is open. Let's go, let's go, let's go.
The casino is open. All right, let's see how things are going to shake out. And with the SPRT thing, all that, we could talk about it more as it gets closer to market close or even the midday session. I can... SPRT, okay, we have it up over here. For me, and I'm not saying that this is right or wrong. This is just kind of how I personally think about it. When there's an upcoming fundamental change that's like pretty obvious, and a lot of people are paying attention to it, and I feel uneasy about what is or isn't going on, I just lock in my profits. It's so much better to lock in your profits than take a risk. Like, to me, I have a bigger issue with holding and watching all my gains go to zero, like mentally, like I hate that, opposed to locking in gains and then see it continuing to run. Cause then I'm like, oh, I could have held more. Like, that's a bummer, blah, blah, blah. But I know what's more like emotionally upsetting to me is being up big on a play and then watching it come back down when I'm just like, why did I not like, I get more mad at myself for being greedy than I do for being cautious. All right. Well, AMC is at 51.17, down 50 cents on the day, but it is pushing back right now. Looks like it actually looking for a new intraday high. But let's see how things shake out. I want to see how people are reacting to the, I guess, more reasonable inflation indications that we just saw for August. Hey, Matt, what is the maximum loss on call options? It depends if you're going long or short, but most people buy calls and buy puts. And in that scenario, if you're going long on a call or going long on a put, your maximum risk is the premium that you spent on it. It is different, though, if you're selling calls and selling puts, that could get a little bit more hairy. All right, I think I am up to date there. Josh, what about LIFE? Like, what do you want to know about that? All right. AMC, fighting. GME, also fighting, recaptured 200, battling at 200. AMC just tapped 51.30. And I just want to quickly know it's closed from yesterday. It was 51.72, it looks like. I guess it's 51.72. 51.72. Dancing around. We've been kind of getting used to this, that the first 15-20 minutes is kind of, I would say over the past couple of weeks, kind of some bullish chop. Like, it shoots up and chops, I feel, is the common pattern for like market open, at least that we've been seeing on AMC and GME. Obviously, it could buck that trend like any day it wants to, but it does seem to be a trend that has been going on recently. But let's see what's going on. Light volume, very light volume on AMC this morning. We've only traded 2.4 million as we're 3 minutes into the day, and GME has traded 120,000. How's the market looking? Looks like IWM might be trying to base at 223. SPY not looking the best, and which is surprising. I thought people were going to get very excited about this inflation news. How does the life chart look to me? I mean, it's a biotech play, so... Oh, and it's a gap up. I mean, I'm not going to chase a gap up. I don't like it. It would have been one thing if you got in here, but like on a gap up, I would never chase a gap up. Too high risk of being a bag holder. Way too high risk. All right. I think I answered that. We did. IWM trying to spin back around. So what I'm looking for right here, look for IWM to push and AMC to not be that far behind. We were kind of noticing that AMC is doing its best to buck the trend of IWM, but it still is putting some weight on it. So look for both of these on the bottom, the Russell 2000 and the S&P 500, to push green, and that should alleviate some of the pressure that we're seeing on basically the AMC and GME stock and price action. So look for these things to push on your bottom screen, and then on the top screen, look for these ones to hopefully follow suit. What is going on in the futures market? Kind of flat from that pre-market action right now. Doesn't quite know what it wants to do. Trying to decide. For my listeners, AMC is at 50.64 and GME is at 197. Let's see. IWM was trying to pop right there, but then it's getting smacked. People are trying to decide how to interpret all this news. Someone is asking about ATER. ATER is at 1533. Not the best, getting sold off this morning. It went from 1670 down to 1480. Very volatile. We're getting some nice swings on ATR. I wonder, let's pay attention to this pushing back, but currently on the day down 14%, but it also gained over like 50% yesterday. IWM market. People are worried about the market right now. That's why we're getting a lot of this chop. Come on, push it back. Let's see some green here, folks. I want to see some green. What's the update on your ATER thoughts? ATER, I like the numbers. The price action today thus far sucks. But if this starts to base and push that $16, $17 area again, it still has everything it needs for a squeeze. But that doesn't mean it's gonna squeeze. These are all prerequisites. You need the price action to follow through. Like, that's usually when a lot of people are asking me about these plays. It's of the line that they find something that is a higher short. Some of the people are going out of their way to find a low float, which is very, very smart. And other people are taking it the next step to finding one that's also on the threshold list. And I like that. But still remember, just because it has all those, a squeeze doesn't guarantee. Just because you're like, oh, found this, and this, it needs all those things to squeeze. And this is a very, very important distinction. But the final missing piece to that particular puzzle very, very much relates to, okay, is there demand? Are people starting to step in and buy it? Do a lot of other people view it the same way you are viewing it? So right now on ATER, it could go, but you need people to start to get interested in it to put that pressure on the shorts. What's up, bro? Wondering if you tried the Dirty Dust yet. Hope you dig it. I did. I think you sent 2 or 3 tubes, and I'm already through like 1 entire tube. Shout out Carl. It's awesome. All right. Looks like the market's waking up now. So instead of opening up at 9:30, maybe it looks like it was a little late to the office today. It looks like the market's waking up about 8-10 minutes into the day. We're starting to see some buyers step back in. But let's see if they hold. You could see how like the momentum is all literally starting to switch before our eyes. No, and of course, right as we say that, the S&P 500, it was looking strong like it wanted to come up. Then someone started telling it. Pay attention to these two on the bottom, and I'm still thinking that these two, if they go, it'll make it way, way, way easier for AMC and GME to go. ATER now sub 15. So there's sellers in the market. It looks like people are just taking their profits from that huge gain yesterday. Maybe it bases at 15 and starts to move off of that. But what is going on with the S&P 500? All it's done is barcode, 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 barcode. Russell 2000 though, pushing nicely. Pushing nicely. What about ZEV? So Zev didn't really meet my criteria just because I don't believe that one's on the New York Stock Exchange. A lot of these other ones are on the NASDAQ, but both of them have independent threshold lists that you could look up. Zev, I really didn't pay too much attention to because it's not on the threshold list, which means it doesn't have not only a magnitude of FTDs fails to deliver, but also has them for quite a while. That's why I think SPRT, like ATR or ANY are a little bit more interesting because they're on that threshold list. So for me, it's a prerequisite, and maybe it's just one of them, but it's an important prerequisite. That's why I'm calling these plays like the FTD squeeze plays. Well, to be an FTD squeeze play, you have to be on that threshold list. And I don't believe Zev is. ATR re-entry point. This thing hasn't squoze yet and still trending on social media. So ATR, let's take a bigger look at it. Potential re-entry point at 1360. Might not even get there because it's already oversold based on the 15-minute. Would love to see this recapture 1560, but in terms of technicals, somewhere between 1370 and 1325. So we could call it 1350, like kind of halfway in the middle, would be the next technical area I would watch. But I wouldn't be surprised if it bounces earlier just because of how oversold it is. All right, AMC picking up, GME picking up. That's exactly what we want to see. SPY and IWM kind of drifting downwards in a weird way, but looks like AMC and GME don't really care too much about that. AMC bouncing off of 50.42, pushing 51 once again. The current intraday high is 51.30, and yesterday's close was around 51.70. So we have about 60 cents to go. Lana, yeah, we took a quick peek at root in pre-market. If you want to just rewind to that. I bought ATR at 7 and took profits at 19. Thanks for the updates. Congratulations. That's a nice gain. $12 per stock. I mean, per share, I should say. That's very, very impressive. Seriously, congratulations. All right. AMC. What are you doing? AMC, man, always still flexing its relative strength compared to the Russell 2000. We've seen this now for about a week and a half where the Russell not looking the best, the market not necessarily looking the best, but it just does not care. It's that simple, that AMC and GME, like once in a while, if there's like some selling like right off the bat, it'll affect AMC, but usually AMC kind of gathers itself in a cool, calm, collected manner and it just continues to flex. So right now, AMC is trading at 51.17. I'm watching that 52 mark. We could watch the close from yesterday around 51.70. GME holding 200, which I really, really like. But both of these guys, AMC and GME, having low volume today. What do you think about JCS and special 350 dividend announcement? In your opinion, is it good to buy? Do you like the chart? JCS. No. I mean, it's gapping up on that announcement, but a gap up that goes red is typically a bearish sign. Like it shows that the market is not accepting the new price. There's such a high probability of an eventual gap fill back down to 680. So I don't want to waste $1.20 per share. AEI is on the threshold list, yes, Adventure Joe. And we're actually seeing some strength. This is, like I said, I've been calling out this as a gap fill play up to $3.36. What do you see BBIG doing once utilization maxes? Not much, nothing different, because remember that utilization it's dynamic. More people could loan theirs out and then the utilization would drop and then it could go back up to 100 and then the shares on loan would be even greater. Once you hit 100, that's not like the final 100, because remember that pool of total loanable shares is dynamic throughout the day. So I don't think like something crazy or magical happens when utilization hits 100, besides the fact that the cost to borrow will most likely spike to like additional sky high values. Thoughts on MMAT? Just kind of sideways chop. You're looking for it to break above 550, 560, and then maybe you'll get an additional push up to 650. But it just hasn't been doing much. Like I don't know, just kind of sideways ever since that, like pretty much all month. Drifting upward, has some momentum. I would say the momentum's in the favor of the bulls, but you want to see a clean break above, let's just call it 575, and a hold above 575 on MMAT. But please be careful on the 15-minute chart. It is overbought according to the RSI. SPRT at 1775. Yeah, this is a little bit what I was alluding to this morning of just be careful with this merger. It's a tough prediction to see what it's going to go. It's actually kind of like a 50-50, like just you're flipping the coin. And it's SPRT today because of the merger coming up. I would argue that it's kind of outside the world of technicals today because it's being fundamentally driven by the fact that it's being acquired. I know Webull has a transaction limit of $3 million. Does Public have one? I have no clue. I honestly didn't even know that Webull had a transaction limit of $3 million. I've never traded that type of size. Can you explain the benefits of averaging down on call options? It's the same argument as averaging down on a stock. You're increasing, averaging down, I guess, lowers your break-even level, but you are upping both your potential risk and your potential reward. I mean, averaging down, I don't think is any more special in options than it is in stock. You're just lowering your break-even point, but you're also taking on a higher risk-reward profile wall in doing so. Have you seen the seller boxing, DD? Yeah, I have. So I actually dove into that last night and I read everything, and I believe that it's a thing, I suppose. Like, I guess I'm not against it, but like when I started to realize more and more what they're talking about, it doesn't seem to have any impact on the current state of AMC and GME. If the entire argument is that they were attempting to do that way back when, like December, January with AMC and GME, okay, it was a failed attempt and it cost a lot of people a lot of money. But I guess it's useful to learn patterns and see if it repeats in the future. But this seller boxing thing, does it currently impact AMC or GME? No. So I think you could learn about it and maybe apply it to like future stocks and future scenarios. I think that's like maybe a valid way to interpret the information. But in terms of does it help anything with AMC or GME or hurt anything with AMC and GME at the moment? No, not really. Unless I like am completely missing something. A lot of people saying ATER coming back. There you go. 1668. We're watching. AMC coming back. It's kind of interesting that AMC, GME, and ATER all kind of moving together. And just so you know, the S&P 500 is very much in a bull flag. So look for this bull flag break. I'm hoping it can really hold on to whatever this level is right here. I don't know why these are green, or sorry, excuse me, yellow over on the side. But we're watching the bull flag on the overall market. Right now, AMC is flexing, pushing 51.40. It has about 37 cents to go until it is green, and GME just went green on the day at 203. Look at that nice MACD cross on AMC and GME. Solid stuff. ATER making this run up to 1670 intraday high. ATER has $1.70 to go. So that means what? It closed at around 18 bucks. Could definitely go green on the day, but it's going to take a bit of time on ATER. We have come together as a unified ape family to become a modern day Robin Hood. This is our chance to write a page in history. Will you be remembered? Shout out Frank. Matt, thoughts on IRNT? Yeah, so we've been looking into that. It's not technically a new IPO or direct listing. It got uplisted. So if you look at the chart, I'm a very technical trader. I like looking at the chart, and it's only been having activity in like a valid chart for not that long of time. So it does, I don't know. It doesn't intrigue me that much. If you want to be in and out of it for a quick day trade, hey, I wish you the best of luck. Have at it. I hope you make some money, but it's not a play that interests me, especially right now when I see a lot more opportunity. I see, of course, I mean, like I said, everyone knows my account right now is 99% AMC and GME, 1% ATER. I do have a position in the S&P on my futures account. I'm playing the futures right now. I just took a small, like a personal bet. This wasn't even an algorithm. I took a personal bet on the inflation. So I'm a little bummed about this today, but IRNT, I just see better opportunity. Like I'm not going to take like low probability setups when there's so many high probability setups right now. Buenos dias, mi amigos. Shout out Robert Moore. All right. So Jimmy, like I said, in the green, currently trading at 2.0. What is going on with these lines? I guess we're just going to have to get rid of these for now because it's definitely messing up in a strange manner. It's like oddly showing them. There looks like a little bit of a tech mess up. Okay, ATR looking strong, likes like it wants to test its like opening value of 1670. SPY, unfortunately for me, looking weak, but it doesn't seem like AMC, GME, or ATER really care. AMC almost went green on the day. Its green mark is around whatever that is, 51.69, I believe. If I'm, or 70, something right there. But basically it's 30 cents shy of going green on the day. And it has a very nice rally. I mean, it's almost rallied a dollar, an entire dollar since 9:37 this morning. That's pretty impressive, especially given the fact that IWM and IWM and SPY are not looking the best. But we saw this yesterday. If you look at the chart of the two major indices we pay attention to on this channel, at least yesterday, they were super weak in the morning, and then all day they just like ended up recovering. So I wouldn't be surprised if they end up doing that again. What do you think about AEI and it spiking and it being on the threshold list? Is AEI spiking? It's up 11%. That's good. Oh, we talked about AEI. It's a gap fill up to 336. Yeah, we've been talking about that. But now it actually has a gap under it. So I think eventually it's going to fill both of these gaps to 336 and also back down to 285. When the squeeze happens, will it last days? In my opinion, it'll last days. It could last weeks, but just based on the days to cover metric, it looks like it's going to play out over a couple of days. I would be willing to bet any amount of money that it's not going to be a one-day affair. There's just simply too many shorts that have to cover, especially when you're talking about AMC. It's just we're not trading enough volume for all the shorts to cover in one trading day. ATER moved $1.40 in 10 to 15 minutes. Such a low float stock. Yeah, you're going to see that. And that's the lower the float, the easier it is for the stock to move. Not a squeeze play, but put BKSY on your radar. Shout out, Frank. Thoughts on fuel cell? I think fuel cell, I mean, I've kind of been an outspoken supporter of the EV industry. I think fuel cell has potential as a long-term thing. I'm interested in it, but a lot of these EV plays, most of them I'm not swinging. I think the money to be made in the EV sector is to hold over a multi-year period. All right. So here we go. We can start doing some analysis. Why is this not? There we go. All right. So AMC, the intraday low is 50.42 and the intraday high is 51.55. GameStop, we are looking at 195 and 204 basically. ATER is showing some strength. wild day. It's gone from 16.68 down to 14.68, a perfect $2 drop. Currently trading at 15.87, so it's up more than $1, but it looks like it's trying to bend back around and see how it reacts to really the mid 16s. SPRT 1750. Shout out Chris. Okay, I'll be on the lookout for that. I don't know why, but someone else even yesterday was saying that they DM me on Twitter, and I'm just like, I don't know if I'm having Twitter issues, but like I'm getting no DMs right now. Like literally nothing is loading. I bought a call on Webull for AMC yesterday. I closed to sell the contract for 800 profit. However, this morning I have contract saying cover stock, leg contract with 300 shares. Stanley, it sounds like maybe you did a little bit something wonky, either creating or closing that position. I don't quite know what you did. And yesterday I closed to sell the contract for 800. However, closed to sell. I don't know if you accidentally, but it should have been sell to close, not close to sell. I don't know if you mistyped that or if you actually entered it in wrong, but that seems a bit weird. However, this morning I have contracts in saying cover stock, leg contract with 300 shares. Yes, something seems weird there, Stanley. I don't think you executed it properly. I don't quite know what you did off just reading this. It does seem strange. You're going to probably want to reach out to their support and really ask them what you did, or just close everything. Like click on your positions and just like sell to close, not close to sell. So you'd want to sell to close, just go flat on it if you're confused about where you're at. Upcoming short squeeze on Root. I don't know about that. Root is not on the FTD list, I don't believe. I could double check that though, just so everyone knows. So Root has a short interest of 26%, shares on loan of 20 million, and utilization of 92. So even that, comparing Root to some of these other plays, it still seems a bit weaker on a relative basis. Where is this? It is on the NASDAQ. Yeah, I don't believe NASDAQ threshold list. Let me check this out. Let me check out the reg show. Yeah, Root is not there. So it wouldn't meet my criteria for this type of pattern that a lot of more people are starting to notice. If SPRT ran 200% and shorts still didn't cover, how was it a short FTD play? Also doesn't affect the short squeeze thesis in any stock. I mean, we did see shorts cover. We did see about 2 days later and 3 days later, there was a net return on those. We didn't see them all cover. And that's why I think SPRT, barring any discussion about this merger, that's why I still thought it had potential, because I was like, hey, shorts are still in here. But the shorts, they just either... Remember, if you're short, that doesn't stop you from trading it in another way. So these people who were short on SPRT, in the meantime, to hedge their position, they could have bought stock and just been if they were short 100 shares, they could have bought 100 shares and then they're net neutral. And when they see it start to get weak and bend back around, they could cut off their long position and ride the short down from there. That's a possible style. You can hedge with the options market. Just because someone's short, they can hedge a position in whatever mechanism they seem fit. If you buy stock and are short stock, that's referred to boxing. You could hedge on the options market. And then there are some people who are just straight up short, and I'm assuming those are the one or some of the ones that we saw cover 2 to 3 days later because of the settlement cycle. But with it, that's why I still thought it had potential. But that one does get a little bit murky now, given the information about the merger with GREE. How is it a short FTD play? Because that's what I'm referring to, this entire group of things that are on the FTD list with a high short interest, a low float, and a high utilization and a high cost to borrow. That seems to be the viable pattern lately, is if it has all those prerequisites on top of getting some demand, like the stock swinging around and kind of flexing its muscles, that's where we're seeing some success. How does the stock get onto the FTD list? Basically, it has to have 0.5% of its float, outstanding shares, I think, FTD for 5 days in a row, and then it gets put onto the FTD list. It's on the FTD list until the FTDs are taken care of, and they have to be taken care of for 5 days in a row, and then it'll get removed. It doesn't get removed as soon as the FTDs are cleared. It has to be under whatever that value is for 5 days. So it takes 5 days of high FTDs to get put onto it, and it takes 5 days of low FTDs or zero FTDs to get removed from it. Hey, Matt, thanks for your content. I want to hear your thoughts on UCO. I think it's thinking of option trading it. I've been holding it since April 2020. UCO. Oil? I mean, oil's been strong recently, and I don't really expect that to change anytime soon. In fact, did this just have a technical breakout? It did. If it holds this, I mean, I don't know if you're buying calls or puts. It sounds like you own it. So if you want to sell covered calls, that's an option. Or you could be a bit bullish on it in terms of going long on calls. But with it, don't swing for the fences on this one. I would say have a very reasonable bet with a reasonable time frame, and I think that's a good setup. I messaged WB about drawings. Trend lines. They move when you scale out. Check your Twitter. I'll send it. You message WB. I don't know who WB is. Is that Weeble? Is that what you mean by WB? Check your Twitter. I'll send you help address it. Thanks. Yeah, I think you mean Weeble. Matt, took a few months off of trading. Now I'm back. I swore to take it slow, but of course my first trade was 2 Tesla calls. Will I ever learn? Music miner, I'm right there with you, man. Sometimes, I have to just retain that title of the best Tesla trader on this side of the Mississippi. All right, I think we did all of that. If it mentions on Wall Street Bets these days, it's most likely a pump and dump. Other than the OGs, Wall Street Bets is trash now. One man's opinion. Wall Street Viking. Yeah, I sell to close, but it says it's a leg stock. I never had this issue. I lost 300 shares and gained a little over 15K. Thanks. Yeah, so it sounds like you made like a multi-leg position somehow and not just like a straight up buying a call or buying a put or something like that. Do a test. I just re-DM'd you on Twitter. Maybe check your receipt at sometime when you get a free moment. Let me see my messages. Yeah, I'm not getting any. My last DM is from 14 hours ago. So something's going on with my Twitter, and I think I get them. It just takes forever for them to actually get through to me. For whatever reason. For whatever reason. Okay, so thus far, I mean, GME has a nice trend upward. Looks like it wants to retest 204. The S&P 500 has been getting smacked this morning, which is not good for my futures bet. But it definitely getting smacked. I would love to see this actually finally turn back around. All right, let's go back to IWM. Also kind of getting smacked this morning. What else do we have? We have ATR. How's that one doing right now? Man, it is a weird September fall day. It seems like right now things are going to be just chopping. When I look at days like this of like just weird chop days, that tells me this is not the day to get in on like options if we don't have a nice trend and volatility and volume are low. This is a day where, hey, sometimes you just get boring days that not much happens. It might just be trying to like really fight against the momentum base, and maybe it'll start moving from here. But this morning, we're just not seeing nice trends yet. I mean, granted, we're only 30 minutes into the day. We still have quite a bit of trading and a lot could happen. But I'm looking for bases on all the things you see on the screen right now and some momentum. We just need some momentum. We need some volume follow through. We need some action. So it feels, as of now, it feels like it's just going to be kind of a calm, chill day, and that's okay. That's part of the market, folks. That is going to be part of your market career. Some days are chill. All right, let's see if the S&P 500 could finally put in a green bar. Man, oh man, this thing just got S&P getting smacked. Not worried, Matt. 2008 times 100. Shout out Simply Crypto. MMT just broke above 575. That seems bullish to me. Well, this isn't a break. It has to hold above it. A break isn't simply trading above it, but MMAT is looking strong right now. If it does hold above this, I mean, it might be returning up to the mid sixes. But MMAT, I don't have any MMAT position, but it is definitely looking kind of strong right now. FVRR as a long play, I like it. FVRR Fiverr, I do think it's a pretty solid long-term investment. Ooh, especially with this, where you might get this gap fill up to 230. I do like Fiverr. This is not like an active day trade or anything. This is one where you're like, okay, I mean, I think it's a good discount store. I do happen to know a little bit about their fundamentals. That's why I was like kind of excited when you just asked. But I do think Fiverr has opportunity for $40 gain per stock. Back up to this gap fill, and honestly even potentially more from that. But I do like it, and I think that this miss on earnings is just a dip buy opportunity. I think the point of the seller boxing thing is how it could relate to AMC and GME at this point, if at all, is that the predicament they find themselves in is that they can't even stop naked shorting selling into every buy order that appears, because if they do, the share price will gap, and this will put tremendous pressure on net capital reserves for the market makers and maintenance margin requirements of the co-conspiring hedge funds and others operating out of the 13,000 naked short selling margin accounts set up in Canada. Other than that, it doesn't really apply. So with that though, that's a lot of unverified stuff. It might be spot on, but right there, when I see a lot of people just like blanketly saying that basically hedge funds and market makers are the same thing, my flags start to go off, because they have different goals. They have different market makers are not directional players. I don't know where people started to get this notion. Market makers are there, and all they care about is the spread. They don't care what the price is at. They care about the spread surrounding the current price, and that's how they make their money. Hedge funds, on the other hand, are directional players. They care very much about where a stock does or doesn't go. So when people are like quickly just saying, yeah, like when I see DD and people are just kind of grouping every establishment together of like, oh, the market makers, hedge funds, and prime brokers all want X to happen. Well, how could that be true when they all have very, very different business models and different goals for them to be profitable? So why would they just like arbitrarily get grouped together? LAC, I like it. Lithium mining, there's a severe lithium shortage right now. Actually, the same thing could be said about uranium. I was reading about uranium last night just because so many more people were asking about it. It seems like there is a higher demand and a lower supply both for lithium and uranium. So at least in the medium term, they do seem to be somewhat realistic bets. I tweet at you, he scams the scammers, cleans them out. He's got a YouTube channel, Kit Boga. I think I know who that is. Is that the guy who does like the voice changes and sounds like an old lady and like then ends up like ruining their computer with the team viewers like screen share and all that? Can you give an opinion on CELH? CELH. Consumer Celsius Holdings. I mean, super, super strong, but I wouldn't buy it an all-time high. The point to get into this one was back here around $70 when it showed this swing back around, and you could have risked 65. You don't buy at a new all-time high. At least I wouldn't. What are your thoughts on Hood Puts with Gensler speaking today? I believe he's speaking about crypto today, not necessarily payment for order flow. If he is, it is an interesting thing, but I think it's about crypto regulations. Yeah, but if that Kit Boga guy is who I'm thinking about, you got to check him out on YouTube. It's so satisfying. It is so incredibly satisfying to see what he does to these scammers. All right, so AMC, what's IWM doing? This is why. You want to know what's going on with AMC? Check out the Russell 2000. Thoughts on body long-term? Long-term, I would need to dive a bit more into their fundamentals. Whenever anyone asks about long-term, that's when I want to know, okay, like fundamentally, where is the company headed? How much market share do they have? What is their future guidance? Who is their audience? Is it a devoted audience? Is it a returning audience? Is it a subscription model? So when you ask me about Beachbody long-term, I want to answer those. And I don't really care about the chart that much. When it's kind of funny. In very, very like short term, like if you say like what's happening over the next 5 minutes, that's randomness. No one really knows. Above that, I care a lot about the chart. But as you go way future into time of like, what do you think about the next 10 years? I care about the chart less and less. And I care more about like, what is the company doing, their audience base, all those things that I just like listed off. So Beachbody, I just don't know enough about it to be like, yeah, this is exactly like what I want to see for a company. It could be good, it might be bad. I don't know enough about it to fairly comment on like the long-term potential of Beachbody. But in a similar sector, I feel like I could comment on Krispy Kreme donuts, which trades under DNUT. I don't know much about their fundamentals, but I know I love their product. So I don't know why anyone would be against Krispy Kreme donuts. So I'm going to go ahead and say the long-term potential for Krispy Kreme is a solid one, because who can turn down a Krispy Kreme donut? Like seriously, like if someone, there's never been a point in my life when someone's like, do you want a Krispy Kreme donut? And I say no. And if they're running on that business model of people being unable to refuse their product, like how does that company lose? What up, Matt? Bend, Oregon, Wounded Warriors here in the green with UVXY October 27 calls. What's your opinion, not advice? Hoorah! Shout out, Daniel. As long as you see this continued weakness in the SPY, like you're looking A-okay. With you, I would come up with some sort of goal of like, where do you want to scale out? Maybe sell a couple here at this price target, a couple more here at this price target. Come up with some sort of like scaling out system, and then maybe if you want to leave a couple on as runners just to see what actually happens. But yeah, formulate some sort of plan. And remember, you don't have to go all in and all out at once. You can scale in and scale out of positions. Someone is asking about TMC. TMC, the metal, it's just recently started trading. Financial conglomerate, I don't like it. I wouldn't trade such a newly active stock. No way, Jose. I just don't know what I would base it on. I don't see support. I don't see resistance. I mean, we only have 5 active trading days, and today's the day 6. Like, nah, better setups out there. Gary is live on CNBC. Really? CNBC. What do we have? It looks like they're on a commercial break. So I have the Gary Gensler thing up right now. It sounds like they're on some sort of commercial break, but I'll let you know. I'll let you know. Did you win this week in fantasy football? I certainly did. I won both my leagues, or both my first matchups, not the leagues. All right, AMC trying to hold on to Fitty Fitty. A weird day. I mean, the market is just dragging it. We need, as I'm watching these things, I'm maybe even at this point watching more of the, like all the Russell 2000 and S&P 500 have done today is sell off, unfortunately. Just joined in. Sorry if you covered it, but is BBIG done for? Any chance for some life? Still on threshold list? I would never say it's done for. Sub 10 is like, I want it above 10. Sub 9, obviously, it's showing some weakness. But with it, when it has all those prerequisites, a high short interest, a high utilization, a high cost to borrow, that does make it dangerous. But if you're missing demand, if people are just not buying it, well, people are just not buying it. You need like other people participating in the stock and purchasing it. And right now, that's what BBIG is missing. It sounds like they're still on a commercial break. Is this just like my CNBC? Like, what's going on? Yeah, still a commercial break. This is like the longest commercial break ever. But even with BBIG, I do think that this is representative of what's everyone's trading plan, folks. Like, at what point, if you see it at 886, you should already know, were you going to hold it at 886 or were you going to cut it loose at 886? Like, you have to have a plan. And I think that's one of the things is like, everyone knows I'm not a financial advisor. Everyone knows they should not be copying my trades. But I think the one piece of advice that everyone should be taking from me is, what is your trading plan? What is your risk? Like, I get a lot of questions of, should I buy it here? Should I sell it here? Folks, I don't know. I literally have no idea what any of these things are going to do next. All I could do at any moment in time is be like, oh, this is what I would risk, and this is my like potential reward in this scenario. It's that simple. I have no idea what's coming next on any stock that anyone ever asked me about, and no one on the planet does. Unless you're some big whale or you're an insider to the company and you know there's some sort of announcement coming out. I don't know. If you're just like an active trader without any like information that you shouldn't be trading on anyway, all we can do is say, hey, this is a risk point. Here's a reward point. And you hope that your reward gets hit before your risk. It's that simple. 888, all I can say about that on BBIG is, what's your risk? Are you risking $9? Are you risking $8? Are you risking $6.40? You got to know your own risk. Some people are going to take bigger risk. Other people are going to take less risk. And I just hope that your reward is hit earlier. ATER getting double smacked at 1650 thus far. Oh, why is this not working? Gary doesn't seem like he's on. It seems like it's some other old dude. Amazon CEO hopes that they raise the debt ceiling. This guy's a CEO? I guess if Gary Gensler comes on, we could do it. Can you opine, educate on why ATR utilization rate means, please? What to do with this information? Yeah, so utilization is the amount of shares that are out on loan divided by the total loanable shares. X divided by Y, you get the percentage. X and Y are both dynamic and change every second throughout the day. The pool of loans is getting bigger and smaller, and the amount of ones actually out on loan throughout the day are getting bigger and smaller. So when you do the X divided by Y, you get the utilization, and that's why it's that percentage. So if you see a percentage of 100%. What that means is the entire pool that is willing to currently be lent out at that moment in time is actually all out on loan. That doesn't necessarily mean that they're all short, but it does mean that they all could theoretically be short. That is a possibility. Uh, 11 a.m. Andy, maybe I just missed the Gensler part? Kramer, commercial, Kramer. Wow. Hang on, this might be interesting.
Step back here. He's attempting to seize regulatory control over a very large swath of crypto assets. And you know, Carl, I think what's going on here is he's made it clear he believes it's necessary to get clarity on the regulatory front before he moves ahead with anything else in the crypto space. And that includes the much awaited, long awaited crypto ETF, the Bitcoin ETF that's out there. I don't think you're going to see anything until we clarify exactly what kind of regulatory control the SEC has over these. So we'll be monitoring Gensler. He'll be here tomorrow at 9 o'clock Eastern time. And by the way, 3 p.m. today at Eastern time, Doug Sifu, the head of Virtu, will have him on closing bell to get his response to Gensler's comments this morning's. Carl, back?
All right, tomorrow will be...
Okay, so it sounds like Gensler coming on to CNBC tomorrow, but it sounds like he already spoke in like to Congress, I guess, or he's speaking to Congress or some sort of government body. I just want to make sure that I'm not missing anything on that. Let me double check what's going on Twitter with this Gary Gensler.
Structure. Market structure is fundamental to our mission to protect investors. On the other side, facilitate capital formation, and that which is in the middle, fair, orderly, and efficient markets. How do we do that? It's through transparency and competition in those markets. So I've asked staff to take a look at a number of market structures. The Treasury market, that's the base of all other fixed income markets. The non-Treasury fixed income markets, corporate bonds and municipals, which, by the way, in the U.S. are twice to 2.5 times the lending out of banks, are loaned through our capital markets, our equity markets, and securities-based swaps as well. In each of these crucial markets, I think companies and investors alike benefit if we can increase competition, lower costs, and bring more transactions out of the dark. Second is a rapid change in technology. We're living in a transformational time, perhaps as transformational as the internet itself. Now, I expect some members might ask a question or two about crypto, but actually the first thing I just want to mention is artificial intelligence. AI, predictive data analytics, machine learning are shaping and will continue to shape many parts of our economy. And while these develop...
Very quickly, just so you know, the flow is against AMC today. And let me quickly check GME. It's very much against GME today.
Even systemic risk. And now for the crypto, because I know that you're all, keenly interested. We just don't have, I believe, enough investor protection in crypto finance, the issuance of these tokens, the trading, and particularly the lending. Frankly, as I've said before, I think it's more like the Wild West. I've asked the SEC staff, working with our fellow regulators, the Commodity Futures Trading Commission, the bank regulators, the Treasury as well, using our current authorities, how can we best bring investor protection to these markets? I stand willing also to work with this committee and other committees of Congress if you take up any legislative initiatives. And then third, issuer disclosure. You see, since the 1930s, we've had a basic bargain. Investors get to decide what risks they take. That's up to investors. But Congress said that it should be based on full and fair disclosure of the issuers. Over the decades, we've updated what those disclosures are, and today's investors are increasingly looking for consistent, comparable, and decision-useful disclosures around climate risk, so-called human capital, cybersecurity, and other areas. So I've asked staff to develop proposals for the Commission to consider these potential disclosures, and yes, put these proposals out to public comment, put rigorous economic analysis again, and what is it that investors want to see, and have the public comment. Beyond these policy areas, the SEC employees oversee 28,000 registered entities, more than 3,700 broker-dealers, 24 national security exchanges. You've got the picture. A lot going on in our capital markets, $110 trillion capital markets. Last month, we authorized voluntary return to work, but we've been largely remote for 18 months now. This speaks to the dedication of the SEC staff. I cannot compliment them enough. And while capital markets have grown, the SEC has not grown to meet the needs of the 2020s, though. Over 5 years ago, we were about 4 or 5% bigger, and so I just think that it'd be helpful to be a little bit wise and add to our staff. I hope that you can agree with me on that. Thank you. I look forward to your questions.
All right, let's see what kind of the questions they hit him with.
How a company, as we've discussed privately and you've spoken publicly, how a company treats its employees matter. The SEC can require companies to disclose that information, but instead of crafting a rule that would provide information and data that could give real insight, the last SEC chair wrote a vague rule that companies can interpret to require as much or more often as little information as they like. That lets companies say they pay their workers a living wage with ample paid leave and retirement contributions while subtracting out half their workforce to while subcontracting out half their workforce to companies that pay lower wages with stingy benefits. We know that's a business model for many companies. Now, why is it important to have disclosure standards that are consistent and comparable across companies?
I think that investing in a company, the human capital, the workforce.
Just so you know, AMC, they borrowed $1.3 million against it, short interest of 20%. In terms of GME, they borrowed $46,000, short interest of 13.75%.
About the employees, what they're paid, how many are part-time, how many are full-time, where they're located, retention and the like. It's even more important in the 2020s than I was young on Wall Street because it is so critical to the valuations of the company. Now, again, we'll put this out to, if my fellow commissioners concur, we'll put it out to public comment and see what investors have to say. And then their feedback is going to guide us on any final rulemaking.
I think it's pretty clear investors are going to want more information like you suggest in your Goldman days. We've talked before about how Wall Street has treated the markets as a game for decades, a game they always seem to win at the expense of pretty much everyone else, including communities in Wyoming and Louisiana and Rhode Island and Ohio and Pennsylvania. SPACs, for instance, draw in companies that want to please Wall Street, sometimes make promises that they can't deliver on. Look at Youngstown, Ohio. There's a lot to unpack with what's happening at Lordstown Motors, whether or not the company's ultimately able to succeed, and I hope it does. It seems clear there were outside investors looking at this not as a long-term investment in a community with a proud manufacturing heritage and a talented workforce, but as a way to make a quick buck with no follow-through. There will always be people, of course, like that, but that doesn't mean we need to encourage risky financial mechanisms to encourage speculation over long-term investment. In a situation like that, when those investors make their money and pull out, companies break promises and workers and community pay the price. What are the risks, Chair Gensler, what are the risks that the SPAC market has highlighted over the last year, and what can we do about it?
I think the special purpose acquisition companies, these blank check companies, the risk are to investors and the disclosure to the investors. I've asked staff to serve up recommendations that we could consider as a commission, but in essence, there's a lot of costs in these, and secondly, they usually have a 2-year fuse, and in that 2-year fuse, they try to go out and buy something. And a lot of the institutional investors, when that happens, sell. It's called a redemption right, and retail investors are often left holding the dilution or the significant cost of the bankers and the promoters. So we're looking at greater disclosures and also looking at if there's inherent conflicts along the way, and then again try to put this out to notice and comment and rulemaking.
Thank you. My last question. It's been 11 years since we passed Dodd-Frank. The rules on executive compensation, as you know, remain unfinished. We've seen executive compensation soar. We've watched executives leave with huge bonuses after presiding over fraud and scamming customers. The phrase golden parachute has become a cliche. It's that commonplace. Why is it important to have strong rules to claw back incentive-based?
Just so everyone knows, I'm getting out of ATER, that small position I have. I don't really feel like tracking it for the remainder of the day. It seems like a premium burn day.
Between executive pay and financial performance.
Let me break it in two things. For the SEC, it's important to move forward because this committee and then the whole Congress with the president put it in law, and it's a mandate that we shall follow. I remember being a staffer sitting on the other side for Senator Sarbanes. I know that that's how he felt. But two, in terms of the substance, I think why Congress addressed this and put it into law is that if there's a material misstatement or omission in the financials, and those financials need to be restated, then the executives shouldn't benefit. And there was a certain number of years, a look-back period, a clawback period, that Congress said, well, then you should give up the performance-based compensation if it was based upon faulty numbers.
Thank you, Senator Toomey.
Thanks, Mr. Chairman. Chairman Gensler, one area that appears to have nearly universal agreement is the benefit of a faster settlement cycle for equity securities.
This is important.
As you know, market participants seem to be confident in a T+1. My understanding is that you support these efforts. I appreciate that. I would just encourage the SEC to move ahead as quickly as reasonably possible so that that can proceed. I also think there's widespread support for fixing the money market fund rule by removing the link between the 30% weekly average liquidity and the possibility of imposing fees and gates. You and I have discussed this. I don't think there's a need for regulatory reforms that would eliminate or reduce the viability of money market funds as an investment, but improving this regulation would reduce the risk that I think the regulatory regime imposes now. I am concerned about the SEC not adequately fulfilling its capital formation mission. Last year's appropriation law instructed the SEC to deliver 2 reports to Congress by the end of June, which would help benefit small public companies. These reports are now past due. I certainly hope the SEC will submit those reports promptly. And you testified to the House that the SEC would have a report on GameStop and Robinhood by this summer. That report has not been produced yet. We got a week left in the summer. I do certainly hope that we will see it soon. Now let me turn to cryptocurrencies. And my time is limited, so I'm going to try to do this as efficiently as I can, Mr. Chairman. But I think I know your position, among other things, is that not all cryptocurrencies are inherently securities, right? That's true.
There are a small number that aren't, but I think that, as Chair Clayton said when he was in front of Congress, I think very many of these facts and circumstances are investment contracts.
So here's my concern. So some are and some aren't, is basically what you're saying. And I'm concerned that the SEC has not provided sufficient definition and explained how it would apply the Howey test, which I think is the court standard for determining when something is an investment contract. So, for instance, stablecoins do not have an inherent expectation of profit. They're just linked to the dollar. Now, you might use them in an attempt to make a profit, but that's a second-order activity. Is it your view that stable coins themselves can be securities?
I think it's, Senator, they may well be securities. As Thurgood Marshall wrote in the Reeves opinion, in defining the scope of the market that Congress, wished to regulate, Congress painted a broad brush, and it actually included about 35 different things inside the definition of a security in the 33 Act.
I've just got limited time here, so I acknowledge that. Here's my problem, though. I think what you just said was that they may be securities, or that some are securities. To me, a stablecoin doesn't meet the second prong of the Howey test, that there has to be an expectation of profits from the investment. And so if it doesn't meet the Howey test, it looks to me like it's not a security. Now, maybe you've got a good argument for why some are and some aren't. My whole point is, I think we need to have clarity on this. I think you should publicly disclose this. Apparently, there are private conversations where you work with people who are proposing particular structures and you give them advice, or your staff gives them advice. I just think we ought to have that publicly, and we certainly shouldn't be taking enforcement action against somebody without having first provided that clarity.
Well, Senator, this Congress could change the laws, but the laws that we have right now have a very broad definition of security, including a note, including an investment contract and the like. And my predecessor, Chair Clayton, and others actually put out a lot of guidance with regard to the Howey.
I just got to push back a little bit on that. It is broad, but it's well defined. There is a very specific litany of the instruments that constitute securities. As you know this better than I do. Investment contract is one of them. And there is a court decision that lays out the prongs for what constitutes an investment contract. I'm just saying, as a layman who can read English, when I read those tests, stable coins don't seem to meet that test to me. Maybe I'm wrong, but if I can misinterpret...
GME looks like it's trying to break out of its bear trend. Check this out. Looks like it's actively trying to break out.
That some of these tokens have been deemed to be commodities. Many of them are securities, and the Supreme Court has weighed in a number of times. You noted the Howey test. We've talked about the Reeves test was in the 1990s as well, has weighed in.
AMC right behind it, also trying to break out.
He has even found, believe it or not, whiskey caskets, and the courts agreed in the 1960s were investments. And I think that at the heart of our securities laws was protecting investors against fraud. They get to decide, they get to take the risk. You'll find I'm not negative or a minimalist about crypto. I just think it would be best if it's inside the investor protection regime that Congress laid out.
I see my time has expired, Mr. Chairman.
Thank you, Senator. Senator Reid from Rhode Island is recognized.
Thank you, Mr. Chairman, and welcome, Mr. Chairman. Cybersecurity is one of the greatest threats that we face, both as a national security threat and also as an economic threat. And in 2018, the SEC issued guidance with respect to public companies. I've been trying over the last several years to enact legislation, Senate 808, the Cybersecurity Disclosure Act, which is very simple. It would require a public company to disclose whether they have a cyber expert on their boards, and if not, why not? I.e., they have other means to compensate. In fact, we did precisely that when it came to financial experts. We do require a financial expert on the audit committee or an explanation why they do not have one. Do you believe that the framework in S808 would be appropriate for dealing with cyber?
Senator, I thank you for highlighting that in our conversations over the last couple of months. I've asked staff to take up 2 initiatives on cyber, one company disclosure and one with regard to funds, the investment funds. And on the company disclosure side, I've asked them to look very closely at your bill and see whether we would not only potentially include that as a recommendation, but also some other issues around, I'll call it cyber hygiene, and then secondly, incident reporting. When you do have an event or pay ransomware, for instance, when do one report? And that's in the 6,000 or 7,000 public companies. And then separately, we're looking at something around funds, the cybersecurity of the investment management field.
Well, thank you, Mr. Chairman, and I would encourage you to continue to pursue this, and would very much like to see my legislation become law and your regulations become adopted. So thank you. Another issue that's come up, and we're all very happy about the increased retail participation in the stock market. There is a lot of people who never owned stocks before that are buying stocks. And some of it is the result of discount brokers offering zero commissions, aggressively marketing, et cetera. But there's another aspect of this, and that is the payment for order flow issue.
Here we go.
Where a lot of these brokers have essentially deals with high-frequency trading firms. In exchange for rebates, they will send their orders to these firms. And the question is the owner of the security getting the best deal, or is the intermediary getting a lot of money? And it looks like there is to evaluate this practice of payment and see if it is fair to the consumer.
We are. I've asked staff to take a look at this. It's been about 16 years since we did major rewrite of the national market structure. And I think the inherent conflicts of payment for order flow and rebates on the stock exchanges both may make our markets less efficient. And this is important for capital formation, and it's important for the retail investors that all three senators have already raised, is that retail investors may not be getting best execution, even if they get a price improvement, but there is price improvement versus a sort of out-of-date measuring rod. And if you measure against the wrong measurement stick, it doesn't mean you're getting best execution. So we're looking out for retail investors. If anybody on this committee or staff legally traded in the retail markets, there's like a 97% chance that it does not go to a transparent exchange. It goes to the dark markets or the wholesalers. And so it's harder to get best execution when you're not competing order to order. So I'm like deeply a markets person and believe in the competition of markets to bring those orders in competition.
Well, thank you, Mr. Chairman. Just you mentioned in your opening remarks that one area you're looking at is the Treasury Market, and I think that's critical. As you know, in March 2020, there was a free...
So that's a bit interesting. He's talking about treasuries right now. In terms of payment for order flow, all public statements made by Gary Gensler, it is in our favor. They truly is. He's like, I want a competitive market. And what he said was like, it's an out-of-date measuring tool. That's exactly what I'm saying is when these market makers, Virtu and Citadel Securities, when they argue about the efficacy of what they're doing, they're like, hang on, it's improved. We're good for the economy. Like this is, people should like us. Yeah, because the way they're measuring it is by the thing that they damage themselves. So it's like a relative improvement, but without them, the basis of what you'd be measuring on would be a far superior improvement. And it sounds like he truly gets that. When it comes to payment for order flow, maybe not necessarily crypto, but when it comes to payment for order flow, it truly does believe, in my opinion, I think Gary Gensler's on our side with the payment for order flow debate.
Chairman, I read your editorial in the Wall Street Journal today about the Holding Foreign Companies Accountable Act. For what it's worth, I agree with most of it. It's a damn good bill, by the way.
Damn good bill.
So.
I want to thank you I think it helps us do our job both at the SEC and at the Public Company Accounting Oversight Board.
I appreciate that. I agree with you, obviously. There's a 3-year implementation period, as you know. Foreign companies, including our friends in China, have 3 years to comply. The Senate's passed a bill reducing that to 2 years. We're having a little trouble getting the House to take it up. Would you be willing to contribute your considerable efforts to encouraging the House to take it up?
Senator, I've already had some discussions and expressed to some of the leadership over there that I support that.
Okay. Who pays corporate income taxes?
Senator, it's the corporation that pays the taxes, of course, then ultimately the owners of those corporations are the shareholders.
Corporations just is not a payor. It's a tax collector, isn't it?
Well, I'm not here as an expert on the tax code. I think the corporation
You're an expert
literally...
on corporations. I think economists are generally in agreement that the corporation is not a payer, it's a tax collector. The owners and the customers and the workers that Chairman Brown spoke so eloquently about actually pay the tax, don't they?
Well, again, I never want to mince words, but I think that the corporation, of course, is paying, and then the shareholders have less net income.
Don't the workers pay it too?
I think that it's a cost of the corporation. Like all costs of the corporation, those costs compete with each other. Even
Yeah,
the
but do
cost of the
workers
real
pay it?
estate.
Do
and
the
so
workers
forth.
pay it? I'm just trying to, I don't have much time. Sorry about that.
I'm not. I'm. The workers pay individual income tax. Workers pay Social Security tax and the like.
I just want to be sure I understand your testimony, Mr. Chairman. You're saying that the workers are not impacted at all by the corporate income tax?
Oh,
right,
I'm
this is
sorry.
getting more
I
to the tax
thought
thing.
you were asking a different question. All costs in a company compete with each other, whether it's the real estate costs or any other costs.
Are the workers impacted negatively by corporate income tax? Real simple question.
No, I understand it, but I think it's best as the head of the SEC to leave
You don't wanna
debates about taxes to Congress. I really do think that that's
I understand
something.
why you don't want to answer it. I get it. Look, I don't mean any disrespect to you. I followed your career. You've had quite a career in public service. You've made a lot of money on Wall Street. I respect that. I honor that. But as to the people and the companies that you regulate as chairman of the SEC, do you consider yourself to be their daddy?
No.
And why do you act like it?
I try to take the oath of office seriously that the SEC is set up to promote investor protection and facilitate capital formation and that which is in the middle.
Yeah, but why do you impose your personal preferences about cultural issues and social issues
Are you their
on
daddy?
companies and therefore their customers and their workers?
With
Like climate change and the Second Amendment. I mean, I'm sure you have personal feelings about abortion. Do you have plans to implement or impose those values on companies?
So I want to thank you for the compliment you gave me, and I've followed your career and have the deepest respect for you too, sir. I think that I am not doing that. I think what I've been trying to do is say, if investors want information about climate risk, and it looks like tens of trillions of dollars of assets under management of asking, we at the SEC have a role to put something out to notice and comment, do the economic analysis, and really see what investors are saying. It's really in that narrow set of chalk lines that we're operating.
Thank you, Mr. Chairman.
Thanks, Senator Kennedy. Senator Tester from Montana is recognized.
Thank you, Mr. Chairman. I want to thank
That was some testimony right
Chairman
there.
Gensler
Those were
for
some
being
questions.
here today. I just got to say one thing really quickly. I've got a farm. My wife and I have a farm. We have a corporation. That corporation pays the taxes. We don't. And we're the only stockholders of that corporation. And that corporation exists over the last 30 years or so, has, quite frankly, helped us financially as we move forward. So just a different perspective. I want to talk about Citizens United decision, which I believe is one of the worst decisions that's ever come down from the Supreme Court. Incredibly detrimental, has ended up with literally hundreds of millions of dollars, billions of dollars flowing into our political system in an untransparent way. I don't think it helps with our democracy. That being said, the SEC has the power to require companies to disclose corporate political spending. Now, the money that these companies put into campaigns may or may not be determined as being materially important, but nonetheless, it depends on who you're talking about. If somebody throws $1 million at me in a campaign, it's materially important for me in that campaign. It may not be materially important to that corporation. Right now, the current appropriations bill prevents the SEC from doing anything about these contributions. Do you believe shareholders should have access to that material information about how companies who these shareholders own spend their money?
Senator, I thank you, and as you noted, there is the appropriations rider, but putting that to the side,
Yep.
as you're asking, similar to the other issues around climate risk and human capital, to the extent that investors want to see that information, and it looks.
All right, this one doesn't seem to be the most exciting question, but I don't know, something about that daddy thing. It made me. Did anyone last night? So what was it? The Met Gala. The Met Gala was last night, and for those of you who don't know about the Met Gala, it is it's a celebration of exuberance, of wealth, of not just normal wealth, but I'm talking of like stupid wealth, stupid wealth. And if you guys aren't up onto it, and this is going to get political, and I don't want it to be political, I want this to be more of a conversation of like, okay, people, can you read the room of what's going on? One of our favorite new political people who have an outspoken social media presence happened to wear an interesting dress that said tax the rich. That's what the dress said. The dress, it was a big like white gown looking thing, and on the back of it, it said tax the rich, and this was a dress that was worn at the Met Gala. And at first you're like, okay, like whatever, ha ha ha, you're like pointing at these rich people. And the more I thought about it, and now that I'm thinking about it in terms of this like conversation, like I just don't get it. Like it blows my mind. People love to run on that. People, like in our current political system in the US, everyone runs on this concept of, look how similar I am to you. Like, we are so freaking similar. And this is not a left or right comment. Politicians love doing this. Politicians love saying, I am just like you. There is no difference. I'm a good old fashioned, hardworking American. I know what it's like to not pay bill. No, you don't. You do not. If you are a politician, the money they make, the fact that they can pay on their they vote on their own pay. They can trade whatever they want. No, they never ever get dinged for insider trading. Like right now, there's that guy in Texas who's getting in trouble. And is anyone else sick and tired of any politician? And let me reiterate this. Left or right of this entire concept of like, we are just like you. Shut up. No, you are not. Maybe one day you were, but the fact now that like, look at me, I'm saying we should tax the rich, and I'm talking to that, like, you are at one of the most like gaudy, ultra wealthy events known to man, period. Every single ticket sold, every single table sold, every single tux, every single dress. Do you know how many people that could have fed? Do you know how much that could have done good rather than just like some sort of campaign for everyone there? And anyone who says that they're doing that, like, are you kidding? Do you know how many meals this entire event, the Met Gala, could have helped, not only in the US, but worldwide? Do you know how many people are like stressing out about paying their rent for this month, paying their rent for next month, really just trying to get maybe ahead on one bill payment? And then we have these like complete ding dongs, like trying to say that they're in argument of like the average American, the average citizen in this world. And they just spent $30,000 on a ticket, almost $300,000 on a table. God knows what on everything else, the tux, the after parties, the pre-games, like all of that stuff. Blows my mind that any of these people in the world buy that. They are not normal. If you are a politician, bar none, you have by definition lost connection to what it's like being an average person in this country or any country, being the average person, having the average battles that everyone goes through on a day-to-day life. And I find it so sickening. And maybe I'm missing something. Folks, I'm 27. I'm not married. I don't have kids. Maybe I'm missing a big chapter of my life to like understand the depth of some of these scenarios. But like, aren't people just pissed off about that? Of like, how are people buying into that? Of like, how can people run their campaign of like, look it, I'm super normal, I'm fighting for you, and then it's just like egregious, gaudy waste? I don't know. That's a thought. just a thought. Maybe you'll hate me for it. Maybe you won't, but whatever.
We've talked about, or transfer agents or something, don't quite fit because they were written in a bricks and mortar time and now we're in a digital time. Let's talk about that. If we need to go to Congress, go to Congress, but maybe we can cobble together something. We did this in money markets in the 1970s. Good people in the state of Pennsylvania, Senator Toomey's state, came into the SEC and sought authorities to do money markets, and that's now a $5 trillion asset class. So I think there's room here to sort things out and try to figure it out, to keep things investor protection focused, but to sort out the new innovations.
And my adjunct question is the general question just about innovation. Do you support responsible innovation?
Oh my gosh, yes. I mean, it's brought us these lights in the room. It's brought us this ability to have a hybrid hearing with your fellow members. I mean, innovation is what supports access, economic activity, and gives so much of us better opportunities in life.
So, given that, how do you right-size the protections that are within your ambit to innovation generally?
No, it's an excellent question that I'm sure this committee grapples with decade after decade. I think it's the core public policy framework around ensuring that the public's not defrauded, that somebody's not misleading them and lying to them, to ensure that if you hold somebody's asset, you don't misuse it or abuse it, so to speak, the physical.
Very, very quick update. AMC is looking strong. It found a nice double bottom support at 49.70, pushing 50.20. GME also good, recaptured 200, looking strong there. And both of these, both AMC and GME are currently, I guess, like bucking the trend of both the S&P 500 and IWM, just so everyone knows. And also some AMC news. It looks like Sorry Charlie retweeted an article from Ultra Short or whatever the hell his name is, that one guy at Motley Fool that really hates AMC. He posted an article and it looks like it's getting some traction, and Benzinga said that it's that article on Motley Fool from this guy that also Sorry Charlie retweeted, that it's called like AMC, the numbers don't add up. Once again, it's a very deep, like fundamental look at AMC, which we know this isn't a fundamental trade. But anyway, just so you know what's going on with AMC.
There's a reason. And I think it helps our economy, but it's also because it's regulated, anti-fraud, anti-manipulation.
So what gaps do you think exist, and what additional regulatory authority would be useful, both at the CFTC and at the SEC, specifically with regard to digital assets?
I think that we have a great deal of authority. I think there's more clarity than some members on this committee. I mean, I know we're maybe a little bit different on that, but I think that in terms of the gaps, we have a great deal of clarity on, I think, what's a security, but the gaps is the coordination amongst our agencies. So, for instance, the coordination with the banking agencies on stable value coins that Senator Toomey raised earlier, the coordination with my sibling agency that I was honored to chair, the Commodity Futures Trading Commission, on the tokens themselves and the platforms, because to the extent something is a commodity, even the CFTC doesn't have regulatory authority, they have enforcement authority. A wonderful piece that Dawn Stump wrote recently that I thought was worth reading. But working together with the CFTC and how to coordinate. And then there's some in the, I would say, infrastructure side, things around transfer agents, custody and the like, that I think we could work with Congress to help clarify.
Thank you very much.
Thank you, Senator. Senator Warner from Virginia is recognized.
Thank you, Mr. Chairman. Thank you for your comments about, in your opening comments about my legislation that deals with disclosure around the workforce. I want to come to that topic, but I want to quickly, Chair Gensler, respond to a couple of my colleagues' comments. One, I want to agree with Senator Reid. This payment for order flow.
Ooh, here we go.
We've been talking about for close to a decade, and we need to sort through it. I think there would be broad bipartisan agreement about that. Let's make sure we make that happen. On incident reporting in terms of cyber, I think the Intelligence Committee probably has as much visibility into that space as anyone, anywhere. We have virtually every member of the Intelligence Committee, Democrat and Republican, together on a bipartisan mandatory incident reporting bill for critical infrastructure, for federal contractors. We're trying to work through details. My hope is we can work with you. If you're going to have a mandatory reporting requirement, you've got to have a penalty or it's toothless. But we are trying to work with industry to make that happen because I think, as echoing Senator Tester, it's only going to get worse. And as someone who shares some of your concerns about crypto, I will acknowledge that you have only put one wild in front of West as opposed to two wild Wests. And as somebody who's worked with Senator Toomey and Senator Loomis, I think and somebody who managed to do pretty well financially because of innovation, I'm all in. But we do need some guidance. We do need some direction. This is I would go to the two wilds in terms of the description of this area. As good as some of the innovation is, Senator Loomis, some of the things I see from the Intel side scare the dickens out of me. So we need to figure out a way to, maybe.
Did he just say scare the dickens out of me? What a line. What a line.
On this area of innovation, but also area where I can assure you abuse. I will give industry one credit here. When we were going through this definitional process, I heard from more newspapers, newsletters, entities for a group that says they're not very well organized. I've never seen a group that's got as many publications as the crypto world already has. Let me get to in my last 2.5 minutes, get to the topic I wanted to address, which is human capital investment. I think we've all acknowledged that every CEO says my biggest asset walks out the door each day, human capital. Yet we don't have virtually any reporting. I agree with the chairman. When companies offload their workers as contractors, they're really not putting their money where their mouth is. So I think our Workforce Investment Disclosure Act, which passed the House, I hope will be part of the guidance of what kind of activities you take. We've got to make sure we have ways, because I believe investors want to know employee retention. They want to know what kind of skills and training is taking place. Matter of fact, I hope that you will also.
All right, this is losing a little bit of its steam, this one. I bought the dickens out of AMC dip. Gary Gensler on the committee. I am only daddy on the weekends. I have handcuffs too, something to hang up myself. Please, in our secret. Ocasio-Cortez reported assets between 2003 and 31,000 in her most recent financial disclosure filed in September 2020. The student loan debt between 15,000 and 50,000. You guys are idiots. I don't know if you're referring to me. I don't know anything about it. This is not some special commentary. My commentary. I don't know. You can care about AOC in general. My commentary is more on I just feel like everyone is tired of politicians. Do you know how hard you have? Doesn't it say something as a global world leader that there's such a serious argument surrounding who we can and can't trust? That's what my commentary is on. I don't care if you're left. I don't care if you're right. I don't care if you're somewhere in the middle or some other weird political thing I've never even heard of. I don't care about that. My commentary is the state of what our politics have been. Seriously, take a look at our chat right now. Do you think that it should be this divided? Just in general, like I said, I do not care if you identify left, right, extreme, in extreme middles. I don't care. I truly do not care. My point is don't you feel like we're the sheep in this situation? Do you know how easy it is for them to divide the two groups and then all you have to do is pander to your base? Does no one else see the insanity of right here, this chat is the perfect explanation or of what's going on. They love the division because then they don't have to do squat. They don't have to have any critical thought at all. All you have to do is call yourself a Republican or a Democrat, and because it's so divided, everyone feels like they have to vote Republican or Democrat with no thought, no research, no DD. This is the game that they want. If they can group us separately and no one is spending the time to think at all, you're like, I guess I'm this, so I'm going to vote this. How is that a healthy system? How is that a healthy political system? Everyone, I'm telling you, I strongly, strongly believe the issue that we're seeing, in my opinion, and like I said, I'm a dipshit. Maybe I don't know. I guarantee you, the person that you think you're fighting with in chat right now, or maybe just randomly on social media, I guarantee you have more in common with them in your day-to-day life and what you want out of life than you do the politicians who are trying to separate everything at all costs because it's easier for them to get votes, for them to keep their job, for them to do what they want. My commentary, if you wanted to take it as being anti-AOC, you could do that, but that wasn't the point of it. My point of it is just like, what the hell are our politicians doing? I don't think the fact that we have to make an entire adventure to Narnia to find someone that a lot of people actually trust in. Do you know how messed up that is? When anyone, you could just search their name and they're like, this person did this person did this person is trading way too much and on things they shouldn't. Does no one see the problem in the fact that every single politician out there, unless they're somewhat mid-tier mayor somewhere in a town, are those the last trustworthy politicians we have left? Just a mayor of some little farm town somewhere? Are those the people we trust? And even that, it's just, everyone clearly has skeletons in their closet, and you can have all the ideological debates that you want. Maybe you're right, maybe you're wrong. I'm not here to tell you if you're right or wrong. I'm here of just saying this system has just become so incredibly divided and such bullshit, and it's tribalism, it's cronyism all of a sudden. And to me, that's the bigger issue. It's so insane. Like I'm saying, folks, remember, the person you're probably arguing with in your day-to-day life of where you have that debate, I'm betting that person has a lot more in similarity with you than our politicians who, they do what they want. They have what they want. I don't know. Some people were saying that the dress was donated and all that was donated. Okay, fine. If it's donated, it's donated. And if that's a statement, you agree with it or not agree with it, okay, it doesn't matter. My commentary is much more on what it's become, and even this, dude, folks. This is a stock market stream with a 27-year-old who just is making fun of himself, and even this became political. Do you know how insane that is? That it's running like this. And to me, that's what I honestly think is so special about this, the ape movement, is we're fighting for the general sense of fairness, the general sense of transparency. And if you're extremely Republican or extremely Democrat, I'm telling you, your party, the thing you're a part of on either side of it, has assisted with the issues. It's that if you think that there's one political party that is completely right and the other one is completely wrong, folks, you got to crack open some sort of book. You got to do you might want to know if you're in some sort of echo chamber yourself. And you see that in all aspects of life, because there's probably a lot of psychological reasons for it, but everyone falls into their own group of tribalism. You get into your own echo chamber, and all you do is hear about how you are so right and your ideas are clearly spot on, and anything that is differing, they're the other. You can't hear them because they're stupid and they're wrong and they don't know what they're talking about. And that's just honestly, that's a wild way to live. That is a bad way to live, folks. With it, for me, I think why this community is still around and still alive and it's still very active, I think a lot of people are starting to realize that, hey, maybe life's okay, but why not fight for things to be better? I think that's a lot of the ethos of what's going on in this movement. It's okay, we just kind of go around as a group. We start to realize, whether it's in Wall Street, the political, whatever it is, we realize when things are happening that is benefiting a small group of people at the detriment of a large group of people. That's obviously a system that should not be occurring. And it happens on everything. If you think it stops at Wall Street, no. If you think it stops at politics, no. It's everything. We have a lot of systems, and when there are very intricate built out systems, especially when money's involved, people are going to abuse it. They're going to take advantage of it. And to me, I really don't think that this ape movement thing is a political leaning thing. I think it's a bunch of people that are saying, hey, maybe I wasn't born into the right situation. Maybe I don't have the right pedigree. Maybe I don't have the right bloodline. Maybe I don't have the right last name. Maybe I just was dealt like a shit hand when I was born. But it's just, that doesn't mean you shouldn't be able to engage in the game fairly, like across the board. And to me, that's what the apes are fighting for. They're like, hey, just by the fact of being born, you at least deserve a shot. Does that mean you deserve success? No. You deserve to play the game fairly, but that doesn't mean that everyone deserves to have the exact same outcome. I would never, ever agree with that. I think people who work harder and provide more value deserve a better outcome. Of course I do. But that doesn't mean that there's some people in this world who, unfortunately, they're never going to be playing that same fair game on the fair field. So I think that, to me, that's why I don't think that this is really a political thing. I think it's a bunch of people, left, right, and in the middle, and on the extremes, all are fighting for like a fair shot at this thing we call life. What's Gary Gensler talking about now? We are their product, new form of modern day indentured servitude. Both parties going to the same station. One's a steam engine, the other one's a high-speed train. My brother, both sides of the aisle are lying to us for years just to get their own agenda through our noses. Please wake up. Please explain to me how Chuckles the gas bag and Neil got their jobs. Unlimited corporate campaign contributed, we're going to make it hard to vote. I honestly don't think one side's necessarily, I truly don't think one side is worse than the other. I think they're both bad and they both have their own agendas. Matt, do you think you're daddy? No, that's Gary Gensler's job, folks. ATER crashing neck support. ATER, let's check out ATER. We have some support at 1250-ish, better support at a low 11s. Social Dilemma on Netflix. I saw that. That's amazing watch. Matt's rant, save moon stocks again. Now treat yourself with some burp water and ab workout. Mark clapping. They all serve the same corporate masters. Yeah, I mean, when you have these super PACs and when you have these lobbyists, dude, do you know? Okay. There might be people out there who are public servants who are very charismatic and they are very good speakers to the point that like they're just captivating. You're like, oh wow, that sounds good. But does no one like realize that whatever they say or do, how can we trust that? When if you look into it, all of them are just being paid off by some group or another. No one is winning any of these campaigns without serious donations from huge entities. Right, left, in the middle, that is an inherent truth. No one is winning campaigns without serious money flowing into said campaign. Folks, they're all being bought by someone. All of them across the board, pick an industry. Those industries are donating to whatever political people they want to push their agenda. What Devin just said, they all serve some corporate master out there. That's how it works. The money, like, and at that point, then how do we even trust what they say? And how do we know it's not just them appeasing whatever lobbyist just like wrote them a fat check? Only the working class can save itself by uniting for our own interests. Gary Gensler ain't my daddy, maybe my scheming uncle, but not my daddy. Where's BBIG at? People are asking about BBIG. BBIG is not looking good. Sub 9. You want that to base, but the closest base I think is in the mid 6s. ATR having a bit of a breakdown. IWM and SPY bouncing back as AMC and GME are bouncing back. GME just managed to hit a new intraday high at 204.60. Bitcoin Z, BTC Z, mine it while you can. Make a guess on the Jimmy Dore show. Talk exactly about what you're saying in regards to both sides being equally corrupt while virtue signaling only to pander to their constituents. I voted on both sides, and in the end, it's just one big WWE match. We're do better if we put aside our views to fix our country. Everyone will realize we have a lot in common. Yeah, I strongly believe globally, especially in the U.S., we have all a lot more in common than people would really suspect. Gary looks like the dad from Step Brothers. Rant up there with the speech from the Independence Day. What's going on? All right, AMC is actually looking good. It looks like it wants to push 51 again. And then after that, we're watching 51.55, which is the intraday high. I would love to see IWM and the S&P 500 continue to recover. SPY, we're looking over 446, and IWM, we are looking over basically... Man, this act like the Russell 2000. I mean, it's a nice level where it's at above 221.50. I want to see this above 222.30. I'm going to Wendy's for a double bacon cheeseburger. Who's with me? Shout out Dan. I miss you, Chair. Oh, hey, man. I'm back with Jordan Warren's the 4-5 house buy, sell done, money back in the account, and ready to buy more Jimmy AMC. Shout out L. Randall. Can you random out tomatoes being a fruit? It brings up the stock prices. Easy, Merc. What's going on? We have a uniparty. Term limits would get rid of bad politicians on both sides. They exempt themselves and their staff from the laws they make for us. All right. So these are looking... Oh, wow. I am past what I need to be doing. Anyway, here, we'll rock this for about... You need to end your rants with this. This rant was sponsored by, and then I just like name some random pack fund that paid me off to do it. All right. They are talking a little bit about T1 stuff, which I would love. I want to get to T0, T evening.
Seems like we've been heading in the right direction for quite some time here over the last 10 years or so. And some of the concerns I have, Chair, Gensler, is that what I've seen from a policy position from you so far seems to may actually jeopardize that path to financial opportunity for the average American. I think back to my days in business when I was in the insurance and for a small time in the financial services business, that I would tell my clients oftentimes that there are really only three ways to create wealth in America. First is real estate, and one of the reasons why we focus on the American dream is synonymous with home ownership. There's no question in my mind that the fact is that you build equity in your house, and you're actually building equity in this nation. It's your share of the American dream that is so powerful and important that we focus on. The second way that you create wealth in this nation and experience more of the American dream is through having a business, and have that business grows and it becomes more profitable, and that net worth that you see accumulating is a part and parcel to the American dream. And then finally, it's having an equity position in the marketplace. And to the extent that we make it more affordable for the average person to invest in this marketplace, they have a chance to literally experience the American dream, to exceed their wildest imaginations financially. If you think back 32 years ago, do you have any idea what the percentage of American households that were investing in the stock market?
Well, we've grown, I mean, particularly in the last 10 years.
32 years ago, any idea what it was?
I mean, I don't know the specific number, but lower than today, about 10 points lower.
Good answer. So 32% of American households 32 years ago had access to one of the 3 streams that leads to creating wealth in this nation. And much of the reason why they had such limited access is because the fees to make a trade were so darn high. Imagine today the average stock price is around $119 with the S&P 500. If you invested in a stock in the 70s and 80s, your stock would have to increase to $139.
ATER still looks
before
weak.
you made a penny.
Buyers are not
because you were
stepping in yet.
Using that increase to pay the transactional cost. Today, it's zero. So literally, you have a chance to invest in the marketplace because we've gotten rid of those high transactional costs. So, as you said, today, the actual number of households that are able to invest in the market, 53% of households are invested in the market. Why? Because the price to get involved in the market plummeted. And so when we hear things like banning payment for order flow, it sends shivers down the spines of people who have waited for this day to come. 15 years ago, it was $15 or $20 to make your trade. Today, it's nothing.
Who is this dude?
You
Mr.
have
Scott.
access
Don't like
to a
him.
market. If you're a rural America living in Saluda, South Carolina, or inner city Chicago for the first time, you have a chance to be in the marketplace. Under the Biden administration, those opportunities could vanish away so quickly, and that is painful as a kid who grew up in poverty, who now has access to the market. 40% of the households in this nation who make less than $75,000 they're in the market. Why? Because it's affordable. We have to trust Americans to make their own decisions on their own investments and not have a paternalistic regime helping protect Americans because they can't figure it out for themselves. And I'm concerned about that. And my question for you is, what is your plan to ensure that the existing system
Who is this
and the
guy?
potential for innovation
Does anyone know
within
his
that
first name?
system continue so that the average retail investor
Scott.
benefits from that and we don't see ourselves going backwards? That
Is it
leads to
Scott?
higher
Scott's
trade
investing in
costs so that
KPLT, just so
fewer
everyone
Americans
knows.
are able to invest their hard-earned money in the way that
What's
they
his
see
first name, anyone?
Senator, I'm sitting here thinking, one, how much my father
Tim
Sam Gensler,
Scott.
if he was alive today, would like you, because
Tim.
he would have agreed on your 3 points about real estate, start a small business, which
He must
did.
be in
never
the
had more than
House.
30 employees, and as a kid, he used to toss us value line tear sheets,
Senate,
and he'd say,
Senate.
"What do you think of this stock?" And he'd
Tim
try to buy
Scott,
50
Tim
shares or
Scott,
something.
Timothy Scott.
Couldn't agree with you more. In terms
A, B,
of the
C,
retail
D,
investing,
E,
I
F,
think that's a
G,
positive thing
H,
in
I, J,
America.
K,
And it was when I was a
L, M, N, O,
kid as
P.
well. On the cost,
Why don't I
we
see
can
his
always do
name?
better. And what
Tim-
I'm saying
Timothy?
is technology
This
is
is
driven
Senate,
down,
right?
and competition is driven down the cost
Tim
of,
Scott.
as you said,
I'm in the
investing.
Senate.
But there's still a cost left. The payment for order
Scott.
flow, even if it's a couple pennies out, is a cost. So it's it's buried behind the scene. What I've raised to the economists with Jessica Wachter and her whole team
Why is he not here?
Can we do better to have more competition, that orders compete with orders rather than one wholesaler buying half of the retail flow in America? And so it's about trying to even do better in these great capital markets we have, but we can't take anything for granted. So I think we're more aligned than you. It's about trying to drive it down even lower cost.
And Chair, I'll take it at your word. And frankly, it sounds like your father was an amazing guy who had a chance to own his house, start a business, and invest in the market.
And never went to college and raised 5 kids.
Yep, and that's the story of the American dream. And one of the things I hope that we protect is the notion that the American dream is accessible for all Americans. And when we have within the administration,
I don't know why it's not coming up.
Parts of the puzzle that could make it worse for the average person in our nation.
Tim Scott.
I think we should pause and take a serious look
Does he have a
at
different
how the
first
market
name?
works and how can we make it better. Thank you.
Thanks, Senator Scott. Senator Warren from Massachusetts is recognized.
Timothy
So
Eugene
thank you, Mr.
Scott.
Chairman. We hear a lot about how crypto is all about financial inclusion. a way for people who don't have a lot of money to be able to manage it or invest it. Now, the banks have done a pretty lousy job on financial inclusion. So I want to test out with you whether or not crypto is an improvement. Last Tuesday, the crypto market tanked once again. The prices of Bitcoin and Ether each fell by about 10%, while a bunch of other tokens failed by as much as a third. So in a matter of hours, $400 billion in market value disappeared. Poof, just gone. And meanwhile, several of the biggest crypto exchanges had outages, which kept customers from making withdrawals or trades. So how did that affect people who don't have a lot of money to lose? Chair Gensler, let's say that last Monday, I took out the last sliver of my savings. I went on the crypto exchange Coinbase. I bought $100 worth of Ether. Then I woke up early on Tuesday morning. That's a good investment. I like Ether. Saw that the market looked like it was beginning to tank, and I thought, I better sell right now. But when I tried to sell, Coinbase, the exchange, was down. So, Chair Gensler, was there anything I could do to get my money out?
Not at a federal agency because they haven't yet registered with us, even though they have dozens of tokens that may be securities.
Yeah, okay, so that sounds pretty risky to me. But let's say that instead of buying Ether on Coinbase last Monday, I decided instead to put that $100 toward buying a cool new token, let's call it New Coin, that was being hyped on Twitter. Now, New Coin is available only on a quote-unquote decentralized crypto exchange. So to buy it, I had to pay a fee, about $20, to the crypto miners who process the transactions. That's $20 to buy $100 worth of tokens. But I figured that was okay because Twitter told me that New Coin was going to make me a lot of money. Then, of course, I woke up on Tuesday morning and the market was tanking. So let's ask about this one. Chair Gensler, on Tuesday, when I wanted to sell New Coin and get back to dollars fast, that exchange had not shut down. But remember, I had to pay $20 on Monday to get into decentralized finance. So how much would I have had to pay to get out of DeFi on Tuesday to sell my coins? Would I have had to pay a second $20 fee, or might I have had to pay even more?
I don't know, because it'd be all in the user agreement. And by the way, you put quotes around DeFi. I think that's helpful because they're really decentralized in name only. There's a user agreement. There's something you're doing with this platform. There's a governance token. There's usually some fees, but I don't know what the particular fees would be.
Well, actually, we do know some of the fees from last Tuesday. The fee to swap between two crypto tokens on the Ethereum network was more than $500. Obviously, way more than the $100 I was trying to trade in the first place. So the question I have is, in the face of these high, unpredictable fees, small investors could easily get jammed and wiped out entirely. Chair Gensler, advocates say crypto markets are all about financial inclusion, but the people who are most economically vulnerable are the ones who are most likely to have to withdraw their money the fastest when the market drops. Does this sound like the path to financial inclusion to you?
It's a highly speculative asset class. It doesn't sound like the path that you mentioned.
Yeah. You know, there are a whole list of
problems. Sounds like a bunch of people telling us what we can and can't do with our money.
Scams, devastating climate impact. But high, unpredictable fees can make crypto trading really dangerous for people who aren't rich. Regulators need to step up to address crypto's regulatory gaps and ensure that we're actually building the inclusive financial system that we need. And Chair Gensler, I expect you and the SEC to take a leading role in getting this done. Thank you.
Thanks, Senator. Senator Daines from Montana is recognized.
This seems like a good break point. Just so everyone knows, so let me make this bigger. So if you want to listen to more of that, I did just retweet it. It's on my Twitter. I think also Gary Gensler put it out there. Does just feel like a bunch of people saying that we're not allowed to trade crypto because it's dangerous. You know, life's dangerous, and I'm tired of people telling us what we can or can't do with our money, because after all, it is our money. If we work to earn it, I don't know why someone can tell us like what we're allowed to spend it on if we enjoy it. So I think that's a bit crazy. But overall, just so everyone knows, I mean, I was planning on going to 11, but it's 11:30. I will be back at 2 p.m. Eastern. If you're on the Discord, I'm about to hop in and hang out with you guys. We could talk about what's going on the Moon Gang server there. But yeah, I will be back at 2 p.m. and we'll stream until market close, just so everyone knows. But thanks for hanging out with me this morning. Thank you for all the support from me and Chair. Best of luck in the markets.